Hi, this is Greg. Welcome to the channel. And on this channel, we talk about business and investment. And a little while back, a few months ago, October 31st to be exact, I did a recommendation video on Intel where I analyzed the company, analyzed some of the mistakes that they've made and the reason for the sell-off, and I recommended that stock. And I thought it would be a good opportunity with some news coming out, some very interesting news coming out this past week. I thought it would be a great opportunity to do an update, and that's what I'm going to do, and it's coming your way right now. Okay, so back in October 31st, as I mentioned, I recommended this stock after a deep and nasty sell-off. Everybody on Wall Street hated it. There were no positive recommendations, no positive research on it. Everybody hated it. I was selling it like 9 times earnings. And since I recommended that stock, that position, the stock has gone up about 11%. So last week, a very interesting thing happened. It was announced that Dan Loeb and his investment vehicle, it's basically a hedge fund called Third Point Investors, took approximately $1 billion position in the company and sent a letter to the chairman of Intel stating some of the issues that he saw with the company and some of the areas that needed to be addressed, including the manufacturing strategy and also the sale of some of their recent acquisitions. This caused the stock to immediately rally almost 6% last Tuesday, December 29th, and I thought it was a very interesting development, and I wanted to talk about it a little bit right now. Let's start by going into my trading account, and we'll take a look a little bit more specifically at the announcement. Okay, so here we are in my trading account. And let's take a look and go down at what this announcement was. You can see right here, it closed on Friday at $49.82. So that's about an 11% increase from where I recommended it. I was trading roughly at 44. But let's take a look at this announcement. Activist investor, Activist Investor's letter to chip maker chairman seeks potential changes to its manufacturing process and divestiture. Intel Corp stock rose sharply on Tuesday after a hedge fund known for its activism told the company's chairman that it recently took a significant stake in the chip maker and urged it to explore strategic alternatives. Third Point Chief Executive Dan Loeb wrote a letter to Intel Chairman Amar Ishrak to ask him to address what he called the company's frittering away of its once market-leading position. The letter, reported first by Reuters and seen by MarketWatch, notes that Intel has lost $60 billion in market cap over the past year and is losing ground to competitors such as US-based Advanced Micro and NVIDIA and Asian-based Taiwan Semiconductors. Okay. Let's see. There was another one I wanted to look at here. This is another announcement. Intel shares caught a bid in Tuesday's trading after news emerged that activist investor Daniel Loeb of Third Point had acquired a significant stake in the chip maker and was pushing it to explore strategic alternatives. Okay. Now let's take a quick look at the chart, since I recommended it on the original video, which I'll put in the description below, and also I'll put a link at the end of this video. You can take a look at the original analysis, which goes into a ton of detail on the financials of the company and strategic outlook, etc. But that recommendation in that first video was right about here where you can see this deep sell-off, just huge sell-off, where it was trading around 44, right? You can see throughout November it went up, and then in December there was a big run-up, to 52. Actually, I think it traded as high as 54, and then that would have been a 22% increase from where I recommended it. And then there was a seesaw pattern. It sold off again, and then with that announcement, of Dan Loeb coming in, it traded up to 49 and change, almost to 50. Okay, now the thing I like about this, with Dan Loeb coming in, he's an influential activist investor. He's coming in with a sizable stake of $1 billion. That's not chump change. And I think what this will do is it will focus management and perhaps even accelerate the decision-making process. And I mentioned on the original video a lot of these things and a lot of the strategic recommendations that Loeb and Co. presented to the board, Intel was already considering. Okay, and the basic thesis and the basic investment thesis of my original recommendation was that Intel management will figure it out. They've made some stumbles, they made some lousy acquisitions, and there's the question of how they're going to do their manufacturing going forward. Are they going to continue to do it in-house, or are they going to outsource it? All of these things were already being looked at by management, and I think it's great that Loeb came in, because it's just going to accelerate our investment thesis, the one that we originally had when hopefully you took this position. Now, one of the things I did on the first video was I had an interview with Jenny Harrington of Gilman Hill Asset Management. She's a very experienced money manager and Intel investor, as I am. And I mentioned on my first video, I've been in and out of this stock over the last 20 years many times. And it's always punctuated by extreme sell-offs when they disappoint on the earnings. And then what happens is all the Wall Street analysts turn against them. They all come out with negative ratings, and the stock sells off, and it reaches a point where it's trading like it is now at 9 or 10 times earnings, when its main competitor AMD is trading at like 110 times earnings. Okay, so just think about that. I mean, which stock do you think there's going to be more opportunity in? A company that has to continue to grow to justify 110 times earnings, or a stock that everyone hates that generates $18.5 billion of free cash flow per year and just has to work through some strategic alternatives and strategic refocusing, and they're going to knock it out of the park again, and there's going to be quite an upside for us in the future. And again, I'm looking at like a 3-year time frame. So I want to replay Jenny's interview with you so you can just get a flavor, because she hits the nail right on the head. And if you missed the first video, I think it's worth replaying it, because it captures all of my feelings on the issue. Here it is.
Are you getting out of Intel?
Not at all. The only thing I regret here is not buying it today and when we bought it in the spring. If I could buy it today and initiate a new position, I'd be happy to. The way I'm looking at this is that there's so much short-termism on the numbers today. When I think back to some of the best investments we've made, they've been at points like this. So we bought Target, for example, the day Amazon announced Whole Foods and there wasn't a positive report to be had. We bought Qualcomm the day after Brexit. There wasn't a positive report to be had. And those are very, very long-term focused investments. We're the same with Intel right now. So be it if there's a rough patch. In our whole holding period, which from here on will probably be 3 years plus, I'm quite certain we'll make money, and I'm quite certain that we'll look back on this and see it as a rough patch that they emerge from quite profitably. They make a ton of money, and they'll figure out a way back to growth.
Yeah, but they think, I mean, there are some who are going to make the case that their key parts of the business may be in fundamental decline, and that's why they're unlike the Qualcomms, which you mentioned, which are still players in 5G and other areas, and then Target, which is hard to make a comparison. It seems apples and oranges.
But you know what?
Yeah.
Sorry, back then, those were the same arguments that were being made for Qualcomm and for Target. And with this, So maybe their manufacturing is in decline, and if they do decide that it is, at least on the call we heard they're being flexible. And maybe they do say, hey, you know what? We don't have an edge here anymore. We're going to transfer the manufacturing to Taiwan Semiconductor. That would be a hugely bullish thing for Intel, and we think that there'll be a lot of upside that came out of that.
Yeah, but the data center though was bad. This is Stacy Rasgon. He's the #1 rated analyst in the space who covers it. Don't think that it can't get worse, he says. Gross margins missed hugely. Data center ASPs and margins collapsed. While we thought last quarter's call was bad, last night's was potentially even worse, as fundamentals are now deteriorating at an alarming pace. Reiterate, underperform. You know I have a great amount of respect for you, Jenny, and all that you do and how successful you've been. But how can you justify saying some of the positive things that you did when the evidence would suggest otherwise?
Well, let's take a look at Goldman's report, for example. So Goldman still has their sell, and I don't know if Stacy's numbers went up too, but Goldman's report still has a sell. But if you read through that whole report, they actually revised their 2022 numbers up in that. So I think we just need to see it play out. And yeah, short term it's ugly. Long term, this is a really powerful company, and I'm betting on the management being able to get things back on track in a positive way.
And that's the other part of it too, is that, I'm not sure what kind of time frames we're talking about. It's hard to argue that somebody has short-termism if they've been in the name for 5 years, for example. That stock, Intel's up 38% over that period. That's half the S&P. AMD over that period of time is up 3,500%. All right, if you want to go short-termism and go 3 years, Intel's down 7% over 3 years. S&P's up 35, AMD's up 470.
I would say your starting point needs to start now, though. And I think you've got AMD that's trading at, like 100 times earnings. You've got Intel that's trading at 10 times earnings. I don't think AMD will be able to sustain the magnitude of growth that they've had. Intel, there's just, and I know this is my repetitive argument, there's just nothing in the expectations. I said this 3 days ago. I was wrong. I thought expectations were low enough that they'd be easy to beat. They're not. Give me another quarter or two. But right now my spirit isn't broken on the expectation that they're going to get this right and find a way to grow and succeed.
So anyway, I think she hits the nail right on the head. I would encourage you, if you have not already taken a position in this, around 49, if you have a longer term time frame, 49 is a perfectly good level to get in at. If you're looking to trade it, I would wait for a sell-off and get in a little bit lower. But I continue to recommend this. But be sure and do your own research, because I'm just telling you what I'm doing and my reasons for it, but you ultimately have to make your own decisions. Okay? Now, please, I'm going to put the original Intel recommendation video up here, and I'm going to put another one over here that you'll be tremendously interested in too. Take a look at both of them, as well as, if you're new to the channel, look around the channel and familiarize yourself with it. There's a lot of great content. It's all about investing, increasing your investment IQ and your knowledge, and making some great investments and some great recommendations along the way. Okay? So please subscribe and please like, and I'm looking forward to seeing you on the next video, which will be coming your way very soon.